I say hold on to your silver for dear life. I think silver is going to shock the world. Not that gold isn't going to shock the world either. And am I saying you need to sell your gold to buy silver? No, I do both. I try to accumulate as much gold and silver as I can. I still think, yeah, silver is the money of the people. Gold is more for the elites, but it's a good thing to have too, I would say. And there's speculation. Some people say that ratio could go to 1-to-1, but I think let's go one step at a time. I think the next key level in terms of the ratio will be like 30. So let's say if gold is at $5,000 and we have a 30-to-1 ratio, that will mean $150 silver.
Silver is now again getting close to the legendary $50 level, which has influenced some of its most dramatic events in contemporary financial history. According to Mario Innecco, the time is now right for silver to finally escape decades of repression and manipulation as the metal develops power and velocity. Even while gold has already risen beyond $4,000, silver is still trading at a significant discount, with the gold to silver ratio remaining approximately 80-to-1. According to Mario, this ratio may turn against silver once it eventually breaks over the $50 ceiling, leading to a historic revaluation of all precious metals. He also revisits the Hunt brothers story, in which market regulations unexpectedly stopped silver's meteoric increase in 1980. Many believe this marked the beginning of a protracted effort to maintain silver's price artificially low. Mario thinks that the metal's fundamentals and market conditions are coming together for a breakout that is unlike anything we have ever seen, following over 40 years of suppression. Don't forget to like, subscribe, and ring the bell for the latest analysis on gold and silver markets. We'd love to hear your predictions. Drop a comment below.
We'll focus on silver first. Silver is looking very, very good. We're fast approaching that historic 50 area. Even though back in 1980, I don't think we reached 50, but it was very close to reaching 50. And same thing goes for 2011. Most people that follow silver closely, they expect for silver to go a lot higher, that it needs to break 50. So yesterday, of course, gold broke 4,000, and I spoke about it, that it tested it first early in the morning, London time, just a few seconds, came back down to like 39.95, and then it just went up like a rocket and stayed up above 4,000 all day. Silver, even though it outperformed gold yesterday, we're still below or above the 80 level in the gold-silver ratio, and also below 1.125%, which is 80 in reverse in the silver to gold ratio. So I think that ratio level there will be broken, either 80 or 1.125% once we break 50. And once we break 50, and it could be today, it's going to be something quite incredible to see. It's really interesting to be alive, in my opinion, because silver has been suppressed for 45 years, and I've spoken about the Hunt brothers, and most people, when they think about the Hunt brothers, they think that they try to corner the silver market, and to some extent they did towards the end of their operations in the silver market. But if you read the history, like I have, the Hunt brothers, they had an oil fortune. I think it was related to Libya, actually, and their father made they were probably one of the richest families at the time. And in the early 70s, with the OPEC crisis and with inflation going up, their revenues went through the roof, revenues in terms of fiat dollar. And fiat dollar after August 1971, and I think the Hunt brothers, the Hunt family, knew about inflation really well. They weren't silly, and but they couldn't really buy physical gold because it was illegal for Americans. Yes, some people got away with it on a small scale by sovereigns, but they needed to buy tons of gold to protect their earnings in fiat dollars. So they resorted to going for silver because silver wasn't illegal. And that's how it started back in the early 70s. And they used COMEX, but they also bought silver directly from other countries and shipped it by plane to the United States. So they had huge reserves of silver. But by 1979, early 1980, they actually had gotten a lot of people involved in the silver market. There's stories about even the Shah of Iran being one of these people, some other Middle Eastern sheikhs, even John Connolly. There's a rumor that former governor of Texas, of course, who was in JFK's limo when JFK was shot, rumors that he was involved with the Hunt brothers because they wanted Texas to secede from the Union. And that is not outlandish because the U.S. economy was in really bad shape in the late 70s, and Texas had a lot of wealth. And if you didn't know, Texas is the only state out of the 50 states that was admitted into the Union through an international treaty. I think it's the Treaty of Hidalgo. And there's an automatic, almost automatic renewal of that treaty every year, I think on the 1st of January. And I think they're looking not to renew the treaty in 1980 or maybe 81. And they're looking to use silver as the currency to back a Mexican dollar, sorry, not Mexican, but a Texan dollar or whatever they were going to call it. So I think what happened on COMEX in 1980, and we know about this because Jim Sinclair told us about it, they basically stopped and bankrupted the Hunts in their tracks. The reason given is because they're cornering the market, and that some brokerages houses that were members of COMEX were going to fail, and so on and so forth. But I think it goes much deeper. But anyway, they basically changed the rules on COMEX. That's why I've always told people, you might want to speculate in the futures market, but beware, it's rigged. When push comes to shove, the big banks and the regulators will crush anyone who challenges it, like they did the Hunts. So they basically banned buying of silver futures. So not surprisingly, silver collapsed from almost 50 to $20, $30 in a matter of weeks. And that was the end of the silver bull market. And it was only in 2011, of course, that we saw silver go back to 50. And even then, there's talk that JP Morgan was involved in smashing the silver price, which really crashed spectacularly, and that they used some of the silver that they acquired from bailing out Bear Stearns. And so there's all these things that went on on silver.
According to Mario Innecco, the long-awaited breakout of silver might fundamentally alter the precious metals market, particularly at this time when gold is still trading above $4,000. According to him, silver might rise to $150 to $300 per ounce if the gold to silver ratio declines from its current high of more than 80 to 30 or perhaps 15. Such a change, in Mario's opinion, is not impossible. In fact, it would be historically justifiable, reflecting silver's genuine value as money as opposed to to a suppressed commodity. He continued by drawing a parallel between this possible upsurge and the global de-dollarization movement, pointing out that the BRICS countries are covertly laying the groundwork for a system of trade supported by gold. An obvious step toward monetary independence can be seen, for example, in Brazil's increased gold purchases following years of dormancy. According to Mario, gold will become the cornerstone of global trade as more nations look for stability outside of the US dollar, and silver, its longtime companion, will climb in tandem. Show some love by hitting the like button, subscribing to the channel, and turning on notifications. Your support means a lot.
I say hold on to your silver for dear life. I think silver is going to shock the world. Not that gold isn't going to shock the world either. And am I saying you need to sell your gold to buy silver? No, I do both. I try to accumulate as much gold and silver as I can. I still think, silver is the money of the people. Gold is more for the elites, but it's a good thing to have too, I would say. And there's speculation. Some people say that ratio could go to 1-to-1, but I think let's go one step at a time. I think the next key level in terms of the ratio will be like 30. So let's say if gold is at $5,000 and we have a 30-to-1 ratio, that will mean $150 silver, which is not really looking at the ratio like that, it's not really outlandish. And if we go to 15-to-1, that's $300 silver. And of course, gold in my opinion is going to go a lot higher. And talking about gold, let's talk about de-dollarization now, because back in I've got the exact date here, July 15th, 2021, I published a video about Brazil's gold reserves soaring by 62% in June. Yes, they bought a lot of gold in 2021, and they were early in the game of adding gold reserves. If you remember well, if you've been following gold for the last few years, the central banks, especially BRICS-related central banks or non-Western central banks, bought the most gold ever in 2022, net gold, since the start of the Bretton Woods. They did the same in 23, 24 as well. And this year they're still buying quite a bit too. And that is all about de-dollarization. But Brazil, for some reason, they stopped buying after 2021, which was strange. And but now news has come out from Christian Gopal, who I follow on X. And who's Christian Gopal? Well, he's the senior analyst at the World Gold Council and reports a lot of interesting data and information about gold. So yesterday he reported on X. It says latest data from the IMF shows that the Central Bank of Brazil increased its gold reserves by almost 16 tons in September. Its first edition of gold since July 2021, right? Which I talked about 4 years ago. Its gold holdings now total 145 tons, which isn't that much, but I think this was in September. Maybe Brazil is going to keep buying a bit more. It seems like the Brazilian Central Bank or whoever's in charge of buying gold in Brazil, be it the Treasury or the Ministry of Finance or the Central Bank, they like to go all in. Like they don't do dollar cost averaging like the Chinese have been doing, 2 tons a month. So I find that quite interesting. The reason why I think Brazil doesn't have more of a bigger, let's say, gold reserves, maybe is because they're running surpluses, and gold is going to be used as a payment settlement mechanism for the BRICS countries in their trading. I think, of course, the Chinese yuan will be the major currency being used there, because it's normal when the biggest economy in the bloc is China. A lot of the stuff is going to be done in yuan. But what gold will be used as is a form of settlement at the end of accounting periods for surpluses and deficits, current account surpluses and deficits. And I still think that eventually we could see these BRIC countries, these non-NATO, non-G7 countries, peg their currencies to gold. But I think that's still, far away. That would be, of course, having some kind of gold standard. And I think that's, very probable because I think China, Russia, India, a lot of these countries, hopefully they're learning that having a fiat currency-based system imposed by one strong nation, like the United States has been doing since 1971, is not really the way forward, is not really the representative way. I don't want to use the word democracy here.
Mario's message is both a warning and a call to action, and it has a strong, upbeat tone. He's telling people that silver's time to shine is coming and that they shouldn't lose hope in it. Silver has been suppressed by market manipulation and viewed as a secondary metal for decades, eclipsed by gold. However, Mario thinks that this period is coming to an end. He sees the beginnings of a new monetary order that prioritizes material wealth over printed money as the world economy moves away from dependence on the US currency and toward hard assets like gold and silver. In this vision, gold becomes the backbone of international trade, while silver reclaims its historic role as the people's money, affordable, practical, and deeply tied to real economic value. The actions of countries like Brazil, quietly rebuilding their gold reserves, are signals that change is already happening beneath the surface. Mario's conclusion serves as a reminder to viewers that these financial developments are a part of a larger global shift rather than being isolated. He depicts a world in which countries are reverting back to sound money principles and confidence in paper money is eroding. His concluding observation that gold is staying above $4,000 and silver is testing $50 is not merely market commentary. Rather, it is a portent of things to come. When silver eventually breaks through its long-standing ceiling, it may set off a chain reaction of monetary and geopolitical changes that redefine power and wealth globally. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.